Picture this. A guy takes a left on a wet road, the back wheel slides out and he's down. Back on his feet in 10 seconds. Torn jeans, bruised knee, cracked helmet. Nothing serious. The bike doesn't get back up. That one goes home on a truck. A week later, the workshop calls with the estimate, 38,000 rupees. Now our guy, he's not worried. He's insured, valid policy, in force, paid 4 years running. So he sends the photos, files a claim and waits. He waits and he gets nothing. Not a reduced amount, not a partial settlement he can argue about. Zero. So what went wrong? He had a third party policy, and third party doesn't pay for your bike. It only ever pays the other guy. He'd been renewing it for 4 years thinking he was sorted. He had insurance, but he didn't have cover. Two completely different things. And that gap is what this whole video is about. And look, this is way more common than you'd think. This month, the Supreme Court actually put a number on it. Of the 30 crore vehicles registered in India, roughly 16.5 crore have no valid insurance. 56%, more than half the bikes and cars on the road. The courts even asked the government to try denying petrol to uninsured vehicles. And most of that 56% didn't decide to break the law. They just let a renewal slide. Feels like a small thing, na? It isn't. Riding uninsured is an offence under Section 196 of the Motor Vehicles Act. 2,000 rupees the first time, 4,000 the next, and the section allows up to 3 months in jail. But that 56% at least knows where it stands. I want to talk about the other 44, the ones who did buy a policy, who renewed on time and are completely sure they're covered, like our guy. They don't find out from a survey, they find out at a workshop counter. And here's why it keeps happening. Bike insurance is honestly great value. Few hundred rupees a year for cover worth lakhs. And that's not the problem. The problem is it's so easy to buy that nobody reads it. 90 seconds on your phone, renew by tapping last year's button. Done. So we end up with rough idea instead of actually knowing. Nothing wrong with paying less. Plenty wrong with not knowing what you bought. So that's what we are fixing today. 5 myths. And these aren't trivia. These are the beliefs that decide whether your claim gets paid and how much lands in your account. And on the way, I'll answer the 3 things riders Google most. What IDV means, what NCV means, and what PA cover means. Welcome to Insurance Academy by ACO. Let's start with the one that cost our guy 38,000 rupees. Let's stay with him because his mistake is the most expensive misunderstanding in Indian two-wheeler insurance. And honestly, the whole thing's hiding in the name. Third party. You're not the third party. Your bike isn't the third party. The other person is. Legally, it's the bare minimum under the Motor Vehicles Act, and it does exactly one job. You injure someone or damage their property, it pays them. That's the whole product. 3 numbers tell you everything. Third party injured or killed, unlimited liability, tribunal decides. Their vehicle or property damaged, up to 1 lakh rupees. Your own bike wrecked, 0. Not a smaller amount, 0. Every single time. So, why does anyone end up on it? Price, obviously. Third party for a 75 to 150cc bike is about 714 rupees a year. And since the regulator fixes those rates, it's the same number at every insurer. And that's fine as far as it goes. It's legal, it's cheap, and it does protect other people from you. It just doesn't protect your bike. For that, you need comprehensive or a standalone own damage policy on the top. Third party दूसरों के लिए है, comprehensive आपके लिए है. One more trap, and this one's changing as we speak. When you buy a brand new two-wheeler and you take long-term third party cover up front, that's been 5 years. This month, the Supreme Court directed it to go up to 6 years. Either way, people see that on the invoice and assume they're sorted for the whole term. Those are third party years. Your own bike's cover is still an annual decision. Okay, first big one. What is IDV in bike insurance? Insured Declared Value. In plain language, it's the most your insurer will ever pay you for your bike. Not an estimate, a ceiling. It starts from the manufacturer's listed price for your model. Then depreciation comes off based purely on the bike's age. Same schedule at every insurer, and this is the one graphic in this video I'd actually like you to pause on. Up to 6 months old, 5% comes off. 6 months to a year, 15. 1 to 2 years, 20. 2 to 3, 30. 3 to 4, 40. 4 to 5, a full 50%. Past 5 years, there's no fixed rule at all. You and your insurer just agree a number, which is exactly when you should start paying attention. Now, the myth. Buy online and that IDV field is usually editable. Drag it down and you literally watch your premium drop. Feels like you found a discount, right? You haven't. You've just agreed to a smaller payout. And it only shows up in the two situations that hurt the most: total loss and theft. Nobody's repairing anything. The insurer hands you your IDV minus the deductible and closes the file. So picture it. Your bike's fair IDV is 80,000. You pull it down to 55 and save yourself 400 rupees. Then in March, it's stolen. You've lost 80,000 rupees of motorcycle and you're handed 55. That 400 rupees just cost you 25,000. So lowering your IDV isn't saving money. It's lowering your own ceiling. That was depreciation on your bike. This one's depreciation on your parts. Completely separate. And it applies every single time you claim. That 400 rupees just cost you 25,000. Your bike goes in for repair and the insurer doesn't pay full price for the new parts. It knocks off a percentage based on what the part's made of and the bike's age. For example, rubber, nylon, plastic, tires and batteries, 50% off. Fiberglass, 30% off. Glass, nothing at all. And metal depreciates with the bike's age, from 0% under 6 months to up till 50% if it's past 5 years. Now go back to that first row, 50% of rubber, nylon and plastic, because that's where two-wheelers live. And think about it, what's a bike actually made of? Fairing, mudguard, indicators, grips, seat, tires. On a two-wheeler, plastic is the vehicle. So say you've got a 50,000 repair and 30,000 of that is plastic and rubber. Half of it comes straight off, 15,000 out of your own pocket on a perfectly valid claim. Nobody at fault, only because zero depreciation was not added. Zero depreciation is the add-on that switches all that off. Usually 10 to 20% on your own damage premium, a few hundred rupees a year, against a deduction that can hit 5 figures on one claim. One honest caveat though, because this does get oversold. Most insurers only offer it while the bike's under 5 years old. And most cap how many zero dep claims you can get in a year. Find that cap before you buy. But on a bike under 5 years, ridden on Indian roads, built mostly out of plastic, this is not an upsell. Ye simple maths hai. What is NCB in bike insurance? No claim bonus. Every year you don't claim, your insurer knocks money off your renewal and it's tax. One claim-free year gets you 20% off. 2 years, 25%. 3 years, 35%. 4 years, 45%. And 5 straight years gives you 50% off on your renewal premium. And that's the ceiling. It doesn't go higher. Two things about NCB that almost everybody gets wrong, and both of them cost money. First, it belongs to you, not your bike. Sell the old bike, buy a new one, and that 50% should come with you. You just ask your old insurer for an NCB retention certificate and carry it across. It was never attached to the machine. It was always yours. Second, switching insurers doesn't reset it either. Move to a totally different insurance brand at renewal and you keep every percentage point you've built. And that one matters more than it sounds. Because the fear of losing that bonus is exactly what keeps people quietly overpaying their premium at the same insurer for years. One limit though, leave the policy expired past the grace window and the NCB just lapses, resets to zero. The long-standing rule is 90 days. A few insurers now allow longer, so check yours. 5 claim-free years gone on a deadline nobody told you about. So before you switch, sell or renew late, ask for that retention certificate. One message, that's it. Now, please pay close attention because this is the myth I'd most want you to unlearn, because unlike the others, this one doesn't hurt just your wallet, it hurts your family. Comprehensive insurance covers your bike. It does not automatically cover you. Two completely different things. And the second one has a name. What is PA cover in bike insurance? Personal accident cover for the owner rider. Think of it like your helmet. The helmet protects your head during the accident. PA cover protects your household after it. It's compulsory under the Motor Vehicles Act framework, and there are just two numbers. Sum insured 15 lakh rupees, premium 750 rupees a year. Now be very clear about what those 15 lakhs actually are, because this gets misread all the time. It's not a fund you can dip into for hospital bills. It pays in two situations only, God forbid, death of an owner rider or permanent total disability. Not for your treatment, is there so your family isn't left with nothing. Okay, now 3 things about it surprise almost everybody. 1. It covers the owner rider. Only the owner rider, not your pillion. Friend on the back, your spouse, your kid on the school run, none of them. Pillion cover exists, but it's a separate add-on you have to ask for by name. 2. You might already have it. You hold a personal accident policy of 15 lakh or more and you can decline this one. 3. And this is the one that catches people. If you bought a policy in 90 seconds on your phone, personal accident cover was often a separate box you had to tick. Plenty of riders had never ticked it. So now you're not fully legally compliant and you're also personally uncovered. So go check yours tonight. Open the policy, search personal accident, see whether 15 lakh shows up. It will only take 20 seconds, but it will be the most valuable 20 seconds in this whole video. So, back to our guy. He didn't do anything careless. He did what most of us do. Bought the legal minimum. Assumed insurance meant what he thought it meant. Nobody told him otherwise. 10 minutes with a document you already have, that's all that stands between you and that phone call. So here's the whole video as 5 questions about your own policy. Second thing worth pausing on. 1. Third party only or own damage too? 2. Is your IDV anywhere near what your bike would actually sell for today? 3. If it's under 5 years old, have you got zero dep on it? 4. Do you know your current NCB percentage, the real number, not roughly? And 5. Do the words personal accident 15 lakh show up anywhere in your policy? All 5 answerable tonight from a file already in your inbox. None of them answerable at a workshop counter, which is where most riders look first. Policy पढ़ने का सही वक्त आज ही है, claim के दिन नहीं. One last thing, because there are 2 myths I left out on purpose. Both only bite on one day, the day you buy or sell a used bike. You see, there's a 14-day rule in the Motor Vehicles Act that catches both sides of that deal. It's why a bike you sold last year can still land a liability on you. That's the next video. Now look, I should say the obvious. ACO sells bike insurance. So of course I'm the guy sitting here telling you to go read your policy. But the cold hard fact is 56% of vehicles on the road are uninsured. Probably because people don't think a 700 odd rupees insurance policy matters. But they're risking thousands in fines and possibly even jail time. So head to the ACO app right now, put in your vehicle number and get to know your premium right away. It'll just take 2 minutes. That's the number, and this is Insurance Academy by ACO. Subscribe, hit the bell icon, and I will see you in the next one.